Today, we're going to learn about a stock market investment process. The core is define your beliefs, define your rules, automate it. Welcome to Richer Soul, your journey to a more purposeful, intentional, amazing life. Where are you going to go and how are you going to get there? Let's figure that out together. At the core is the financial well-being to be able to do what you want, when you want, how you want. It's about personal freedom and abundance. Let's meet our guest. Lauren Bensdorp is the author of The 30-Minute Stock Trader and a specialist in automated investing. Lawrence has lived in 11 countries, speaks 5 languages, and currently lives with his family in southern Spain. Welcome to Richer Soul, Lawrence.
Thank you, Rocky. My pleasure to be here.
Yeah, it's a pleasure to have you. This is interesting. You've lived in a lot of different places. How did that come about?
I was fortunate enough when I was young that I started a career as a whitewater rafting guide. I started to do whitewater rafting in Austria. And of course, work like that is only a seasonal job where in Europe or in the United States, you can basically do that job from May until September, October, more or less. So after that, of course, I was looking a little bit what else I could do. And since I was in that world of the whitewater rafting world, you get to know a lot of different people. And it was fairly easy actually to get connected to other people who could help me to get the same job in a different country. From Austria, I got a job offer to work in Turkey. And then from Turkey, I went to Israel. From Israel, I went to Costa Rica, etc., etc. Yeah, it was basically like that.
All those times, you were just doing whitewater rafting in all the different countries.
That's correct, yep.
And you've learned 5 languages. Was that something you did when you were young, or is it something you did as an adult?
I'm from the Netherlands originally, and in the Netherlands, most people, they speak at least 2 different languages because there's not a lot of people who speak Dutch, of course. So when we're young, we actually get brought up in speaking as well at least some different languages when you go on vacation to Germany or to France or to Spain, etc. So I was quite used to that already. And then, of course, when you start to work around all over the world, it was very easy to, of course, to perfectionize my English. But besides that as well, I've lived a very long part of my life in Latin America. And that was in a couple of different countries, in Costa Rica and Chile, in Mexico, Dominican Republic. Most of my girlfriends at that time were from those countries as well, and they didn't speak any English. That got me forced basically to learn Spanish. I think with that, if you also have a passion to really learn languages, for me, it was just a joy to being able to travel around the world, do what I love at that time, and learning new languages.
Wow, that's impressive. That's the one thing in the United States we don't really do is learn other languages, which is a shame.
Yeah, biggest disadvantage people in the United States have is that everybody else likes to speak English and love to speak English as well. It's kind of like straight away you move to that language.
Yeah, in some senses, it's been somewhat universal. So which country was your favorite out of all of those?
Oh, which country was a favorite? There were a couple of things. I think definitely as far as the area, it was definitely Latin America. I always liked the vibe over there. I really had always a good time over there. But even in a continent that big as Latin America, you've got so many differences. I think the two countries that really stood out for me were Costa Rica and Argentina. They are very different countries. Main thing was what I liked so much was the relaxed approach towards life, just the incredible kindness of the people.
From a safety standpoint, did you ever have to worry about anything?
Not really. At that time, when I started to work, for example, in Costa Rica, I was 25. I think your perception at that age, as far as safety, is definitely different. And when you're a little bit older, you see everything as an adventure. On the other hand, I did not see any real safety issues as long as you stick to certain basic rules, which is not flashing your cash around and stuff like that. I wouldn't have gone to countries where there was like a huge conflict at that time. So I kind of made sure that I chose it, that everything was okay, but I never had any issues with safety either.
That's interesting. I just know a lot of people always worry, especially in South America and some of those areas. And you were also in Turkey. So that's a very different place as well.
Yeah, exactly. And of course, when I was in Turkey, it was very different than what it is right now, because I was there in 1995 or 1996, I think. So we're talking 22 years ago. At that time, it was I personally think, a better place to be than what it is right now. Yeah, it was just very different.
The world is constantly changing. So
yeah, you can say
keep
that.
up with
Yeah.
that. Now, you recently wrote a book and you did it through a company, I think it's called Book in the Box. And I know
That's correct.
A lot of people want to write books, but it's difficult and not everyone has the skill set. But I think this new concept, they made it easy. How was that process?
Yeah, for me, it was a little bit the same as well. I always wanted to write a book, but I thought like, okay, the complete process of writing a book, publishing it, etc. It's just a real unknown world. I had a little disadvantage, of course, as well with my language, the English. I mean, it's not perfect. It's very good. So that was like another roadblock that I needed to overcome. And what the great thing is about that service of Book in a Box is what they do. They just take the writing part out of you, although the content comes from you. And they do that we make an outline together of the complete book, how it needs to look like, etc., with all chapters. And then you go with an editor and you start to talk about every chapter. So they will interview you and you can explain everything about that book. And they're really skilled in that they ask the right question as long as it takes to make sure that I, as the owner of the content, of course, provide them with enough content so that they can actually write the complete story about it.
The hardest part is the upfront, which is figuring out all the chapters. What am I going to cover? So do they go through the process of asking you the right questions to come up with all the chapters, or is that something that you kind of had to do on your own?
No, they definitely help with that part as well. For me, as far as the big picture of how the book needed to look like, I had like a good idea already. But when you talk then to an expert who really has, from a marketing standpoint of view as well, a very good view of how the structure of all the chapters need to look like. So that's what he does. So they really put it into clear, definable pieces.
And then it makes it easy. Once you have the pieces, then you can dig in and go through the process and tell the story.
Exactly, yeah, because then you understand yourself, of course, exactly what needs to go in every subject. It is, and that's important, I think, for everybody to know, It is not the case that they can help you writing a book if you are not an expert about the content. This is just a way of publishing a book for people who just do not really like to write that much, but do have an incredible amount of knowledge, of course. And that's how it worked.
Yes, you have to be the expert in the knowledge. Otherwise, no one's going to want to read your book.
Exactly, yeah.
How long was the entire process to do this?
In my case, it was about, I think, 5 months, more or less. Most likely, it's even doable to do it faster than that, I think. In my case, it took a little bit longer because I needed to provide a lot of the research myself, actually. That took a little bit of time, but it's basically more or less around a month where you have a lot of series of interviews about the complete content. Then you get a first concept of a written concept of how the book looks like with the copy, etc. And that's where you start to communicate with the editors as well. You start to proofread and everything, and you tell them, okay, I would like you to enhance on this. This part does not really seem correct to me, etc. And that's where the whole editing part starts. And then from the editing part, it goes to the design part of the cover and the marketing, etc.
On a difficulty scale, how difficult was the process for you to be able to get the book out?
In hindsight, it was very easy. However, if you are in that process, it was fairly easy for me, but I had, of course, still a lot of doubts, but that was more my issue. Because it's the first time when you do something like this. Many times we as human beings have a lot of beliefs, and not necessarily all those beliefs are that useful at times. So that's where I kind of started to make it myself a little bit more complicated and started to second guess certain things. Still, I think in the way everything was handled, in the way everything was written, etc., it's really a straightforward process.
And I think that's one of the things. The biggest hurdle we have to get over is ourself. And it sounds like you struggle through that as well in getting the book out.
You start to just have all kinds of thoughts and stories that you tell yourself, like, okay, well, will the book be that good? Will people like my book, etc.? So that part, of course, is not very useful. But at least on the other side, those guys were doing their job in providing me with the perfect copy. Then there comes a time when you start to edit it, you start to read it. Then there comes a time where you just have to transform your thoughts, your negative thoughts into something positive as well. In my case, what really shifted that was just the confidence that I had in that company, that they really were professionals in what they were doing.
So because you had a professional sitting next to you, you felt more comfortable.
That was definitely the key, that if you see all the other books that they have published, they really know what they're doing. So there comes a time when my awareness started to increase, that what I was telling me about all those doubts, etc., wanting to believe my own story was just, of course, not true. But when that awareness was high enough, then I could shift that straight away into a lot more useful mental state that said, okay, I want to have this finished now as soon as possible because I can see the real positive outlook as well. That was, of course, based as well on clear statistics about all the other books that they had published already. So it was not the end of it was not unknown. It was very clear where this would go.
All right. And it's good to have clarity to see the process and to have someone essentially holding you accountable and just walking with you as you did it. What is it on average? What would someone spend to go through this type of a process?
I think it's $25,000 now.
Wow. It's a big commitment.
It's a commitment, definitely. But if you see how much time normally I would have spent to write a book like this, maybe hiring different writers who help me with that, or trying to do everything myself. And for me, it was a decision where I said, like, okay, my time is value as well. And if I have a clear view, like, okay, in 5 months or so, I can have a book completely published with marketing, with everything. I think what for me was so good about this complete process is that everything is done. As long as I can give great content, then they will make sure that they write a great book about it. They do the marketing for you. They do the designs. They do everything. It was a financial commitment. On the other hand, if you know before that the outcome will be that positive, then I think as a businessman, it's a fairly simple business decision.
Absolutely. You just have to be clear up front what you're doing, what your outcomes are, and then you go through the process. And
Exactly.
It helps to have others with you to get through it, because otherwise it's difficult and there's so much to learn just within the process of writing a book.
Yeah, exactly. Especially the whole publishing world, if you're not that familiar with it, it's just such a long road of unknown territory. That combined with the fact that writing a book is a big roadblock by itself already, where every day other questions arise, then it just is a lot better to say outsourcing that. And I'm always have been a big fan of outsourcing things to somebody who is an expert in that. Every human being has certain capabilities and we have strengths and weaknesses. I definitely favor the fact that we need to increase our strengths and focus on that, and our weakness, if we can outsource that to somebody else who is a lot better in that process, the end result will be a lot better, and my happiness will be a lot higher as well, because I am focusing on the stuff that I love to do, and I do not need to focus on other things that I do not necessarily like that much.
Absolutely. That's a great philosophy. Very similar to what we've talked about in the past, is
right.
Focusing on your strengths. And then the problem with the weaknesses is if you struggle to do that and you have to do something, it eats up all your time just thinking about doing it. Then you procrastinate, and then things don't get done. It makes something that would be 10 minutes of work turn into a 2-hour distraction. And then you don't get your main priorities done because you're fussing over this one task. And today, It's easier and easier with virtual assistants, with so many different online sites, to just, for a very low cost, you can get rid of a lot of things that you need to do and have someone else do them and get rid of those distractions. It allows you to be the best you can be.
Yeah, exactly. Because you don't need to focus on the negative, on the stuff that kind of sucks the energy out of you. I think the more we are aware of our weaknesses and willing to find a solution for that, the more and the better the overall results will be, because the productivity that we have just increases so much.
Too often, it's one of those mindsets where we think we have to do it all. And that's not the case. You don't have to do it all. Getting someone to help you makes it so much easier.
Exactly. Yeah, totally agree. Totally agree.
So your book is The 30-Minute Stock Trader. So clearly you're involved in investments. And what I always like to ask people, because most people who get smart investing usually do it by making lots of mistakes.
Correct.
So what are some of the biggest mistakes that you've made, and what have you learned from that?
I started investing and trading about 17 years ago in year 2000. And I think the first big mistake that I made, and it's probably the most common mistake that a lot of investors make, is that they think they can do it. They think that, okay, the investing is easy. There's not a big block to start as an independent trader. You need to open your brokerage account. Many of the brokers actually will give you money to open your account. That, of course, at that time sounded great to me. Right now, I'd say, okay, that's straight away an alarm bell already. But at that time, I thought, okay, it shouldn't be that difficult. Trading, of course, is really a top sport, and you really need to be the best possible. And if you see, for example, if you see a brain surgeon, the guy has studied, I don't know, what is it, 10, 15 years that they need to study before they can do brain surgery? More or less, huh?
It is. It's quite a long time. There's college, medical school, and then they go do their residency for years. So
Right.
it is quite a process before you can do that.
Exactly. And then with trading, because the brokers provide you straight away with a brokerage account, you do not need to have any preparation. You do not need to have any education at all, and you can straight away start. And then, assuming that you actually will make money and beat the professionals is, of course, a big mistake. You need a large part of education for yourself. And unfortunately, for 99% of all traders, that education mostly is done by losing money. And that necessarily is not what we want, but it appears to be a very good teacher if you see your bank account getting lower and lower. I think another thing is that many investors, they think they can predict the market. They form a kind of an opinion about the market. They say, okay, I think the stock market is going up, and I have 1, 2, 3, 4, 5, 6, 7 reasons why it's going up. So that person buys a stock, and then they do everything possible to defend their position, rationalizing any kind of market behavior which would support their initial decision.
We always want to be right.
That's exactly the other point as well. I mean, we have been taught when we were young that we need to be right. At school, when you have the best grades, you're the best. With stock trading, what we need to do is we need to make money. I have investors that I trade for. They don't pay me for being right. They pay me for making them money. It just happens so that you can have, let's say, 10 positions. You've bought 10 different stocks. And let's say one stock you bought at 20 and then it drops to 15. Then nobody wants to sell that stock because they say, my goodness, I don't want to take that loss. Let's wait until it moves around again and until it moves back to break even, and then I sell my position and I'm out. Now, of course, sooner or later, you will have bought a stock at 20, which will go all the way to 0. And then the loss is definite, of course. Now, if you have another approach where you say, I cut my losses and let my winning stocks ride in the trend. So that looks different. That says, okay, if I buy a stock and the stock goes down, well, it's probably not a good stock to be in there. So let's get out. On the other hand, when you've bought a stock and it's going up, why shouldn't you go out? Why should you take a profit? Because that's the other investing mistake that a lot of people make. They want to feel good about themselves. They want to take a profit so they can say to themselves, maybe to other people as well, like, okay, I just took a profit on that stock. I had a great trade. But if that stock is still rising, why should you sell it? What I just explained is a simple process which is called long-term trend following. It is exactly so hard to do that just because you need to stick to those rules that you need to cut your losses. When you're wrong, get out. Stop trading. Most people have a lot of difficulties with that.
They do. And even professionals have difficulty with that too. And that's why it seems that most mutual funds do not beat the market more often than not, especially over time. I think in listening to one of your things, that there was a comment that jumped out at me. And you said, define your beliefs, define your rules, and automate it.
Correct. Yes.
Let's start with the first one. Define your beliefs. What does that mean?
You can only trade your strategy correct if you trade it according to your beliefs. I mean, there's a lot of different ways to make money in the markets. You can be a contrarian that says, okay, I'm buying when the stock has dropped a lot, or you can be a trend follower that buys when the stock has increased a lot already, and you just want to follow those trends. The latter is really a strategy where you will be in a position that is mostly according to the news. The other one, the contrarian position, you will be buying when everybody else says, get the hell out of that stock. But both are very profitable if executed correctly. However, your belief needs to be in line with the strategy. If you have a strategy, let's say you have a belief that you need to buy stocks as cheap as possible and then sell them with a very small profit, then you couldn't trade a trend following strategy where you will be in for a long time. You do not necessarily buy that low. Your strategies, your decision process needs to be 100% in line with what you believe about the markets. Now, it is important, of course, that your beliefs, that you will backtest them so that you have the statistical information that your actual beliefs actually do make sense and can make money, of course. That's the first part, which is the beliefs part. Does that make sense?
It does. And one thing I want to clarify, because I think people don't accurately look at stocks. If I tell you a stock is $5 and another stock is $100, everyone assumes that the $5 stock is cheaper and it's a better investment. But that's not the right way to look at a stock, because the $5 stock may have, the company might be losing money. The valuation, when you have to look at the actual numbers behind the price of the stock, not the price of the stock. The company that's $100 may also be losing money or have a very high PE, or it could be a good value, but you can't tell that just by the price of a stock. You actually have to look at the valuations behind it.
Yeah, exactly. I think what a lot of people need to be aware of as well is that you have the so-called stock splits, where a stock, let's call it Apple, there were times when it was trading at 600, 700, etc. And then because the price was so high, the company said, okay, we need to change our policy because not all the small investors can even get in here anymore. So they did a stock split. So when you have, let's say, 10 shares of $600, they did a stock split 6-for-1. And then you suddenly got 60 shares that were all priced 6 times lower. So suddenly the price is looking a lot lower. It's still the same stock. It's the same fundamentals. It's just a company decision that says we have the right to change the stock price. And if we lower it, you just get more stock of it.
Correct. And I think people need to understand that valuation behind that. If they don't,
exactly,
they're making decisions, oh, that stock looks cheaper or that stock looks expensive, when in reality, that may or may not be. You've got to go into the fundamentals and look at the balance sheet and the cash flow of the company you're buying and whether or not it's making money and whether it's expected to continue to make money and whether it's going to grow in the future or whether it's going to decline. So certain industries are getting taken out right now just because technology keeps improving. I think nobody's got a BlackBerry anymore. So investing in BlackBerry at that time didn't make sense. Even though they were selling a lot, I think it was clear that over time they were not going to continue to do that. Anyone who's wise would say, oh, that's not a good investment. And I think that stock went from like $80 down to $4. I think it eventually went away. But you need to look at their cash flow and their future sales and see if that's going to continue to do that. We talked about Apple. Question is how much more can Apple grow? You've got to look at the actual sales of their products and see how big is the market, how much more can they grow, and does it make sense for the valuations that you're at?
Let me comment a little bit on that. The process that you just explained is basically the fundamental trading process, where we take a look at balance sheets and stuff like that. And based on that, we make a decision about what our perception is of that company. What we do then is we make a prediction of what is going to happen. That is one style of trading. I do not necessarily think that it's the best style for trading, especially not for private persons. You can also have another style of trading, which is a quantified approach. That is an approach where instead of making a prediction, you only look at price action. And based on that price action, you make a decision which is quantified by statistical results. For example, if you use the fundamental approach, we assume that based on our perception, a stock needs to be at that kind of price, and it probably needs to drop right now because of the BlackBerry story that you told. However, if the price is telling us something different, then there should be no reason to actually get out of that position yet.
It sounds risky to me in the sense that I think that's one of the biggest issues that comes up. To me, it sounds almost like a little bit of mania. You know, right now the stock market's at very high valuations in the U.S.
Yep.
And people continue to push it higher. And that's why, and I think we touched on this earlier, when stock markets go up like they are currently, everyone rushes in to buy stuff at a premium price. And when they fall to the bottom and they're cheap, no one wants to buy them at a discount, which is completely opposite than everything else we do in life. We don't go to the grocery store and say, oh, what's the most expensive stuff this week? I want that. You go to the grocery store and you look for a discount. The same should be true of stock investing, in my opinion.
So that's a clear example for a fundamental approach. Basically, if you are already in a trading position, then you do not necessarily need to follow that perception. So, and I'll give you an example. 1998 was a time, the end of 1998 was a time when stock market valuations were very high already. However, in 1999 and beginning of 2000, you had the huge dot-com boom. So although valuations were high already, and if you at that time had a position already in the market, I do not necessarily think that you need to sell based on a perception, because many times it is exactly that mania that can make you an incredible amount of money. The most important thing, however, is that you manage your risk very well. If you practice a trend following approach with that you say, I just stick with this trend until it bends.
So this is the important part. How do you know when it's bending?
There's a lot of statistical and technical indicators that you can use for that basically say if you use a moving average, which tracks the price over a certain period in the past, and you say as long as the stock price stays above that price, I just stay in the trade. When the price drops below a certain price where you can clearly see that there is no uptrend anymore, then you close your position. If you do that, I can show backtests, etc., that you can see that an approach like that will outperform any kind of buy and hold approach by a lot, because you let your winners ride, and when the stocks start to drop, then it's time to get out, and then you just close your position. If we go a little bit more recent, the bull market from 2003 to 2007, interesting bull market, which was a great recovery after the 2000-2002 crash. We know all, of course, what happens in 2008. So you were riding that trend from 2003, 2004, 2005, 2006. You don't care about the valuations. You say, okay, price goes up. We stay in. Then, end of 2007, markets started to get more volatile. Uptrend was changing into a downtrend until such a price came, and you can measure those prices with simple technical indicators. Then you closed all your positions, and when the complete bear market came in 2008, you were completely flat and you didn't have any position.
So you were totally out of the market at that point.
Exactly, yeah. In my book, for example, I describe one strategy which is explained with complete buy and sell rules of when to buy and when to sell and what stock to buy. Then you see that specific strategy since 1995 has made a compounded annual growth rate of 19% with a maximum drawdown of 30%. Now, if you compare that to the S&P 500, the S&P 500 only made a 7% compounded annual growth rate. So it's almost 3 times as high. And if you see the yearly results and the monthly results as well, you see that the second half of 2008, the strategy was completely in cash.
Okay. And that was based on the momentum of where things were going.
Yes.
I haven't looked at the day-to-day prices of 2008 to see how fast things collapsed and the ability to get out in time.
I think it's important to understand, if you practice a trend following approach where you say you will stick with a trend and you only sell when it bends, you need to be aware that your winning positions will give back a part of the profits. And that's exactly what is so important. it's almost impossible to sell at the top, right? Because that's where we start to guess, etc. But many times we can be completely wrong and the stock just keeps rising another 100%. So we say, okay, when it rises from 50 to 100, I don't care if it goes back to 85 and then sell my position because it might go up even further. You need to be willing to give a part of your profit back. I personally think that is a lot better approach than saying, I guess that from now on the stock will not be moving higher. I've always been amazed about the hysterica and the manias, how incredibly long prices can continue to rise, but also can continue to drop. The markets always go to extremes. They always look for those moments.
Absolutely. And it's repeated throughout history over and over across different markets that does occur. I know when you talked about this, you've got to remove the emotion from trading. How do you do that? Because that's not easy.
No, that's probably one of the hardest parts to do. I think the main thing is that you trade according to your beliefs. Secondly, your risk management. Your beliefs, we talked about that already. It's so incredibly important that you need to have a strategy that is in line with your personality, in line with what you believe. The risk management, or we also call that in the trading world, the position sizing, basically answers the question of how much. I mean, we can have a process of buying and selling decisions. However, we need to have a process to define how much we're going to buy and how much we're going to sell. If somebody is very risk adverse and you get into a high volatile market environment, that person will have a hard time feeling very comfortable trading his positions because he sees his equity going all the way, going up, going down, etc. And eventually they can't handle it. So they close the positions at mostly the worst possible time. So you need to define a strategy where you risk such an amount that amount is in line with your personal comfort zone. And I always say that no matter how my trading day ends, if it's a winning day or a losing day, my mental state should never be affected by the market. If I know beforehand that a certain amount of volatility I can't handle, then I should not buy that much in a percentage of my equity.
For most people, it's going to be that they don't want to be in the market then.
Well, let's put it this way. Let's say that somebody starts with $100,000. They want to trade the markets, etc. But they have not a very strong risk appetite. They get nervous when things start to move around. They don't want to lose money, etc. Why don't they start with $25,000?
And just get used to it. Well, because
exactly.
But at the end of the day, if you've got $100,000 in the market and the system says that you can have a 30% drawdown, that means you're going to lose $30,000.
Well, if you start with $100,000 and the system can get a $30,000 or a 30% drawdown, that's a $30,000.
Right.
However, when you say we only will invest a quarter of our equity, so that's $25,000, then, of course, that $30,000 that you can lose now is only $7,500.
It's still knowing the way people behave. I think this is where the issue comes in is behaviors. As much as it works and there's the right way to do things, we as people don't.
I think there are definitely groups of people who should not be investing at all just because they don't have the stomach for it. what everybody needs to realize, whatever the strategy is, the more potential return means the more potential you can lose as well. It's always a question of risk and reward. If somebody is after having a 20, 30, or 40% compounded annual growth rate, one needs to be willing to lose money. Because if we don't risk money, we can't make those outstanding returns, of course. But it's a lot better than when people say, okay, I'm just going to buy a mutual fund. So if we see the performance of the mutual funds, first of all, it's a lot less than the S&P 500 because the advisors need to be paid, etc. They've got a high-paid staff. But still, if one advisor would be able to actually match the index, still in 2008, the market dropped 56%. In 1929, with the big depression, it lost more than 80%. And that's what people need to understand, that's what you get if you have a buy and hold approach. If you have, however, a strategy that says, okay, we're going to get out of every position because the market is not in our favor, then you can limit that risk.
Absolutely. Just a side question, if people aren't investing in the market, where else could they invest? Real estate?
It doesn't matter, but every investment has risk. And it really depends. If somebody is very skilled in real estate, then I would not necessarily recommend that they do anything in the stock market at all, because they can definitely leverage more their qualities and focusing on real estate. I don't know that much about real estate, so I don't do that much in it. There's other people that make a prediction that the whole financial system is going to collapse, so they buy gold, stuff like that. It really depends on your beliefs and on your preferences of what you want. What is your objective? What do you want to achieve?
I think that's probably the hardest part, is to define your beliefs and to know if your beliefs are right or wrong.
Well, to know if they are right or wrong, as far as stock market investing, a lot of that you can actually verify through backtesting, where you use the historical price information and you write a program or hire a programmer to write that program, and that program tells you exactly when to buy a stock, when to sell a stock. And then you can see how those beliefs have turned out, if they were sound and made money, yes or no. That's why I say, okay, before you trade, you at least need to understand and need to be knowing if your decision-making process actually has an edge and makes money.
So in the book, do you talk about your decision-making process? And
completely.
Okay.
Yeah.
So if people can go learn, and then they can test it for themselves and they can mimic what's in the book.
Yeah. In the book, I explain a lot of different strategies for different personalities as well. I've got a contrarian strategy in there. I've got a trend following strategy in there. I've got a short selling strategy in there as well, where you make money when the market buys. Everybody's different, so everybody has a different comfort zone of what they would like to trade. But every strategy has around 20% compounded annual growth rate, or even a little bit more if you start to combine the strategies.
Okay, so there's not one specific strategy, there's multiples. And
exactly.
I guess you also have to know at the moment which strategy may be the best at the current time.
Not really, because then we get into the prediction trap again.
Okay.
What we know is that the strategies have a very large statistical edge to being profitable, outperforming the market by a large factor. But the key into getting results like that is consistency. One needs to actually put in the trades every day and not having second thoughts about it. The main issue with the approach that I have, that people suddenly start to think like, well, I'm not sure what's going to happen tomorrow, so I better do not trade. As soon as you start with that, then the whole systematic approach which you initially wanted to start does not make any sense anymore, because you're not following the rules of the trading process.
That's interesting. So how much time is involved in doing this?
If you have exact clarity already on what strategy you want to trade, etc., then you have the software, but then the whole process is done in less than 30 minutes a day. And that is the real key as well, that you don't need to sit behind the screen every day. You don't need to read the newspaper or watch the news to see what the fundamentals of the stock are. We do not care about fundamentals at all. We just say, okay, we have statistical information since 1995, what a certain strategy has made based on exact quantified buying and selling decisions. And that is what we apply into the future. So we just need an historical data provider that updates the prices of the complete stock market of the last day. And then with the software, you scan the markets for new buy and sell decisions that are based on that strategy. And then you enter those trades into your broker platform, which you can do before the market opens. And then you're basically done for the day.
So my question is why doesn't a professional just do this and let us just invest in, for lack of a better word, their mutual fund?
There's a lot of professionals who practice this approach, and they are incredibly successful. There's other professionals that think that they can predict the market. But there's definitely one of the largest and most successful hedge funds of all times, Renaissance Capital, from Jim Simmons. I think they manage around 20 billion, more or less, and they have results, I think somewhere between around 30% compounded annual growth rate per year, and that is after they've charged you a 40% profit fee and a 5% management fee. And the approach that they have is 100% based on historical data and 100% based on price action. Everything is programmed into algorithms which tells you on a daily basis what to buy and what to sell. And they have got a large staff of scientists, etc., that occupied with that the whole day to developing new statistical edges in the markets.
And that's what we as people have to compete against, which is not easy to do when you're trying to compete in a market against someone who's got that kind of a staff and expertise.
Well,
does that matter, or is it?
For one reason, it is, of course, that they have, as far as the staff, they have a lot more skill. On the other hand, they have a huge disadvantage. The disadvantage is that they trade $20 billion. That means that 85% of all stocks they can trade, because it would be stocks that have not enough volume on a daily basis. So because they trade so large of a size, they can only focus on the big caps, on the very liquid futures, etc. However, if you are an investor that has, let's say, $250,000, then you have a stock universe of around 2,500, 3,000 US stocks that you can trade. So that, compared to those big funds, is really a big edge, because they can't trade that stuff. For one size, they have the advantage of maybe having more skilled people with programming and stuff like that. On the other hand, they have a big disadvantage as well.
Their size makes it very difficult for them
Yeah,
to
absolutely.
be in
Yeah.
the market. So on average, how often do you hold a stock?
On average, my holding period is about 3.5 days.
Oh, so you're constantly in and out of stock.
Let's put it this way. I trade a combination currently of 21 different strategies. So I trade very short-term strategies that are day trading strategies. Then I trade some swing trading strategies that have a holding period between 2 and 5 days. And I've got some longer-term strategies as well, where I have a longer holding period from somewhere between a month and sometimes even 5 or 6 months. That's a trend following part. So take the average of all those trades. It's around 3.5 days, more or less. So it's quite actively managed as well. And that's exactly what is my style. I like that. I like to trade both long and short in the market. So because I trade both long and short, I don't really care if the market drops. I'm not afraid of that because I know when the market starts to drop, my short selling strategies will make a lot of money. So for me, it's more of a matter of making sure that I execute and follow my system to the minute to make sure that I get the most out of it.
That requires time and it requires expertise. Well, now?
No, it doesn't require time because my computer and the software that I wrote and that have some of my students as well, just on a daily basis, scans for buying and selling decisions. Because, I couldn't do that personally. We don't have a processor in our brain which is equal to those fast processing speeds of the current computer. So the computer basically calculates every day the buying and selling decisions, so it can be done in less than half an hour a day. Okay. It's basically before the market, we put in all our orders, and then at the end of the market, we take a look how we have done.
Okay. And on an average stock, let's just keep numbers simple. If I were to make $100 investment, how much are you looking to earn on that $100 investment?
It depends what strategy, because as I mentioned, I trade 21 different strategies. I have strategies that are very low frequency where I certainly hope that the stocks double in value. I've got other strategies where I buy a stock at 100 and when it moves up to 102, I sell it. So there's a lot of different strategies involved.
How often do you lose money on?
Around 40% of my trades will be closed down with a loss. And that is exactly the key as well to why this makes money. It's fairly easy to develop a system that makes 80% of the time's profit instead of mine that only makes 60% of the time profit. However, what we need to take a look at, and this is getting a little bit more technical, but what we need to take a look at as well is the size of our losers. If we close a trade with a loss, but it's a very small loss, and on the other hand, if we close our winners and our winners are 3 times as high as our losers, then we have a phenomenal statistical edge.
Correct. You do. I worry about people just following the system and doing what they're supposed to and keeping the emotion out of it. Because that's true. That is the most important thing. And what I always say is people first need to understand really how the strategy works, why the strategy works, why there is an edge, knowing that you can have different strategies according to different beliefs. You can have quantified contrarian
strategies, or you can have quantified trend following strategies that follow the crowd. They're completely different. And not everybody can trade exactly the same strategy. It needs to fit their personality. And then they need to develop that confidence that they are aware that they need to execute it correctly to actually make that money. And I think the best way to have that confidence is if you see past results of the last 22 years of back-tested returns, where you see what the strategy would have done, when it would have been buying, when it would have been selling. And if you see that process over and over again, where you can have the statistical information of more than 25,000 trades, what is important is that people have the confidence to actually trading this. And when they have the confidence, they are a lot more able to execute their system 100% correctly. So when you have a backtest in which you have, let's say, 25,000 trades that are based on that exact decision process, then you have a real clear view of how that strategy would have been working in the past. And then you can see what the exact edge is. Then you would know, for example, like, okay, if I buy when a technical indicator says buy over here and sell over there, and if you do that over and over again, then you will see that you have 65% of your trades closing as winners. Then you have a real edge. But that edge only exists, of course, if you actually trade it according to that rule. But it is the past results that provide you with the statistical information.
How do people figure out their beliefs, match it to the system that best works for them?
That's a process that I teach in my elite mentoring program. And it really has to do with your personality. I mean, if somebody, that's where we all start. Everything with stock trading starts with the psychology. If somebody has a personality where they like fast-paced, when they like a lot of action, etc., then most likely a stock trading strategy where they buy and they need to sell 3 months later is not going to suit their beliefs. They would need something with a lot more activities. So then you suit your buying and your selling decision based on that personality. On the other hand, if somebody is very patient and they don't have an issue with giving a little bit of the profits back, then a trend following strategy would be really good. I think before you start, you first need to understand the different kind of strategies that you can trade, and having the awareness that you can trade so many different strategies and that they all can have an edge. And then kind of start to find your way. What is your preference in this? If you trust the statistical information, you see what a big edge you have compared to normal wealth managers who define their process basically on predicting where to go.
Absolutely. If people want to get involved in this, they are going to have to make a commitment to figure things out before they invest their first dollar. So part of that is learning the systems. The other part is learning yourself, making sure that you're going to follow the steps and behave appropriately. Otherwise, you create a massive mess.
Exactly. Yep.
And I think people need to just sit down and think it through before they do anything. Unfortunately, I think for most people, when it comes to investing, they don't have a process. They just kind of do what someone told them might be a good idea, and they don't think it through. And that's why I think you see so many people in the situations that they're in.
Exactly. And that is exactly what you explain is exactly the reason why most people lose. We are taught by the white noise from the media that we need to predict where the market is going and that we need to listen to the so-called experts because they know it. That's how we have been taught. If you turn on CNBC, etc., that's all they're talking about. Like, we expect this stock to go that and that. And then the other thing is that people, they're always looking for tips. When I tell somebody I'm a stock trader, then mostly the first question they ask is, do you have any inside tip for me? And of course, they don't exist, those inside tips. In my case, it's just a structured process of buying and selling decision based on statistical data. Unfortunately, beginning traders, they don't know anything and they start investing many times at the worst possible time with way too much money as well. And I always tell somebody when they start trading, trade as small as possible because most likely the worst possible time you will be as a trader is in the beginning because you don't know anything and the market is going to teach you most likely a lesson which will cost you money.
People may not realize this, but there are trading platforms that allow you to trade without using money. And what I mean by that is essentially you can go in and do fake trades. So you can spend 6 months testing out a system, making the fake trades and seeing how they would work out. And at the end of 6 months, after you've made all your mistakes, you can see how you're doing and then say, you know what, now that I feel confident, I'm going to actually use real money.
Yeah, I think that's a lot better approach already because you will most likely screw up the most while paper trading, thus not losing any real money. I personally, and that's of course a belief for me, say it's even better to have an approach where you can have 20 years of past data where the software tells you how you would have been doing with your strategy for the last 20 years.
I didn't mean to say that. I mean, what I meant to say is you take that data, you come up with your system, you can look at it backwards, but now you can try for a few months going forward to convince yourself or to see for yourself what's actually going to happen. And you can see, you can experience those wins and losses and make sure that you're comfortable mentally before you invest $1.
Yeah, I totally agree. And I think that's a really good way to start with that because trading live is just different than trading on paper as well. So the better you train yourself to be able to handle this process correctly, the better it is going to be. Absolutely. Yeah.
And you can also at that point then make sure you'll do the work and you'll follow through.
Correct. Yes.
So it's good. Is there anything else that we should talk about or that you'd like to share?
I think for most people, the advice that I give is when you would like to start with investing, be aware that this is an incredibly high competitive arena where 90% of the people consistently lose money. So don't start with this because you read on Facebook that stock XYZ is going to increase in value a lot, or don't jump straight away into, I don't know, Bitcoins now because everybody is talking about it because most likely it's the worst possible time. But think first what you really want. Think about what you believe about investing and think about what your objectives will be and then come up with a plan.
Absolutely. And I think that applies to just about every part of life. And unfortunately, it's the one thing that nobody does across a multitude of areas. it's perfect advice. Whatever you're going to do, think through it, make sure it fits you and your beliefs, and then figure out how to do it, get the knowledge, and execute according to what the rules are.
Exactly.
And whatever it is, it doesn't matter. It's the same process to be able to do that.
It is, absolutely. And you can avoid so many mistakes and so many issues, so many disappointments, etc. if you actually approach stock trading or trading and investing as a business and not approaching it as a hobby. It's your life savings, or you need to approach this as a real business to make sure that you beat the best possible.
Absolutely. So if people would like to contact you, what's the best way for them to find you?
They can go to my website, which is tradingmasteryschool.com. And on that website, you will see a link as well to buy my book, The 30-Minute Stock Trader. And there's also an email address if they want to send me an email and have a question. I'm more than happy to help them out.
Thank you. And I appreciate your sharing that. And if people are interested, they can check it out and do their due diligence, make sure everything's in order, and see what they want to learn. So thank you for being a guest here today. It was very enjoyable chatting with you.
My pleasure, Rocky. Thank you very much for having me, and wishing you a great day over there.
Thanks. It's important that you take the time to learn and understand how things work before you invest in them. There are many different ways to invest, and you need to be clear and find the one that best suits your personality. Thanks for listening today.